In a blockbuster deal, Netflix announced it's buying a storied Hollywood studio, Warner Brothers Discovery. So what does this mean for the streaming giant? Let's go to Matthew Dolgin, senior equity analyst at Morningstar. Matthew, you don't think this is necessarily positive for Netflix. Why?
Well, put simply, we think they're paying too much. We think that the Warner Brothers Discovery assets that Netflix is getting are really unique premier assets that will be a big benefit to Netflix, but not at the price it is paying. And in our view, it seems a little bit like, I don't want to use the word desperation, I wouldn't go that far, but an acknowledgement of a weaker business than maybe the market would have assigned for them to pay this type of price for these assets.
Okay, and we should let viewers know it's about $83 billion, including debt, so 82.7 US. Are you concerned about integration, how this will work?
In part, yes. I wouldn't necessarily describe it as integration per se, but it is about how they can monetize this business to a greater extent together than they can apart. And so the market, obviously, before the rumors of Warner Bros. Discovery being up for sale went out, was valuing Warner far, far less. Our valuation on Warner, which was higher than the market, was still less than this. And so how do you come up with 50% greater value than even we assigned, which, let's say, for this business would have been about $17 to $18 per share? And it's through enhancing revenue and profits. Certainly, like always, there's going to be some cost savings. We don't think that's enough for this alone. And on the revenue side, although we do think there are many areas where Netflix can better monetize some of Warner's assets than Warner can, we also think that as you contemplate how these two huge streaming services will work together, you're inevitably going to initially take some lower revenue from subscribers who subscribe to both. It's to be determined how they will go to market with bundling or integration of the two platforms. But one way or another, we wouldn't expect for a subscriber who currently subscribes to both to pay the same amount as they subscribe to both. And we think there's a lot of subscriber overlap.
Okay, so at some point it could be more money for subscriptions. Netflix putting down a large amount of cash in this deal. Was that, do you think, the incentive for Warner Brothers Discovery to take this?
Based on all the reporting we've seen, that doesn't seem like the primary consideration. From what we understand, the Paramount offer was probably even more cash. It would have been for all of Warner Brothers Discovery. So they're not apples to apples deals, but it probably would have been comparable, and it probably would have been even more cash in the pockets of Warner shareholders. So no, we don't think that cash was the overriding factor in Netflix making the decision it did. And there will be, the story is ongoing, whether there will be controversy, litigation, or further developments, and Paramount not necessarily giving up yet. All remains to be seen as well.
Yeah, we should. I'm glad you added that, because there are opportunities for counteroffers. And Paramount, Skydance, accused Warner of favoring Netflix, claiming there was a predetermined outcome for the bidding process. Did they provide anything to back up that claim?
No, we didn't see anything that really backs it up. And even, to further counter that, based on what what Netflix and Warner did agree to, it's harder for us to see how Paramount would really have a case that this was anything other than meritorious, that Netflix won. It was a really high offer in our view. Again, that Discovery Global business, which Netflix is not acquiring, Warner shareholders will continue to hold. It'll have a little bit of value, not very much. We expect maybe about $3 a share, but that does go on top of the $27.75. And so it's certainly far from clear that Paramount's offer was better, if at all. And then as far as an argument about which has an easier path to regulatory approval, we don't think that shareholders are worse off necessarily, certainly not clearly worse off, going with one versus the other. We think each of Paramount and Netflix have regulatory hurdles that they would have to get through, that on the merits, one doesn't clearly have an easier time than the other, even if there are different factors depending on which company needs the approval.
Okay, so they both would have challenges doing that for the same reason, that they would just be too big and almost have a monopoly in the entertainment business. Do you see Netflix getting past this?
Well, and so in Netflix case, it is the the streaming market between HBO Max, which is the fourth biggest provider in the US, and Netflix, which is the biggest. That's the biggest regulatory hurdle there. For Paramount, it wouldn't be that. Actually, those two streaming services we think really did need to be together for the benefit of the market. But between the film studios and sports rights, there are other reasons why Paramount would have had its own hurdles, in terms of regulatory approval. To your question about whether Netflix can get this through, that's a question. We're certainly not saying that we think that it is a likelihood. We called it a toss-up. We don't ultimately think that consolidating the top and fourth biggest streaming providers should itself preclude this deal, but a reasonable argument could be made that that alone should preclude it, especially with streaming becoming more and more important. And so, yeah, it's going to be a challenge, and that's even apart from whether you have Paramount putting its nose there. And I know the White House has already kind of come out and said skeptical of this. And so Netflix has a big lift ahead of it to get approved, and it's not a foregone conclusion.
A quick question about whether you think movies, if the deal does go through, Netflix will still have movies in theaters, because that seems to be a question as well.
That is a great question, and it's one of the reasons why we say Netflix is likely going to have less monetization right off the top than Warner does. As far as whether they put movies in theaters, it seems like at this point, yes, they probably will. But the second question is, do theaters stay exclusive, or do movies stay exclusively in theaters for as long? And that's a much bigger question. So although before today we wouldn't have said, oh, certainly there's going to be just as many movies in theaters, maybe there will be, maybe Netflix is committing to that. But even if it does, is it keeping them exclusive for as long? And if it doesn't, and if it really wanted to rush to get those films to its platforms, which we think it does, that's its business model historically, that ultimately leads to less opportunity in theaters and less theater revenue. Again, another hurdle for Netflix to get over, not to mention what it might mean for the theatrical film industry.
Matthew Dolgin is with Morningstar. Matthew, thank you. Appreciate that.